So I want to share with you how I made an additional 36,000.
What did you just say?
36,000.
Come again?
By trading margins this year off of one stock, and how you can set up margins and do the exact same thing.
Nice.
So what is a margin? Well, you might be a newbie stock investor, you've never heard of it before, or maybe you've been trading stocks, you know about margins, but you're just not clear exactly how they work and how to get started with them. Well, either way, my goal is at the end of this video, you are very clear on what margins are, how they work, what the pros and cons are, and how you can implement this in your stock portfolio.
The game plan is you go in there, don't get hit, come home with a pocket full of cash.
So you might invest currently with E-Trade or Ameritrade, or you invest through JP Morgan, whatever platform you're on. Typically the broker has a margin option, okay? And what a margin is it's basically a match on your account. They typically will match you 50% of the account portfolio, and they will use your portfolio as collateral. So for example, if you have 10 grand in the account, they will say, we're gonna lend you an additional 5 grand to go out and invest and buy more stocks. Now, typically the only qualification to get access to margins, usually by the broker, is around having like 2 grand minimum in the account.
Oh, come on now, look out for a brother, man.
So once you have 2 grand or more, typically you can invest for margins where they will match you 50%. Now, why would you want to invest on borrowed money? Well, maybe you feel really convicted about a stock. Like when I bought Red Robin for $6, I was very convicted that that stock was going to go up. So I wanted to leverage the brokerage's money to be able to invest at that time. And so the cool part is you might be wondering, well, what's the interest rate? Well, the interest rate with E-Trade, and your brokerage, you have to look at the interest rate, but on average, they're about 8% interest. But this interest rate, this is the crazy part, it's not per month, it's annualized, which means that they divide that 8% interest over 12 months, which basically means that you're paying less than 1% interest per month on the money that you're borrowing.
Wow. Wow. Wow.
Right? If you do the math, it gets kind of crazy. What I did is I put in $15,000 into Red Robin, and I took out the 50% margin, which is $7,500. So what I want to do is show you what happened to that extra $7,500 that I borrowed, and I want to minus the interest that it cost me to borrow that money, okay? So 7,500 times 480%, which as you can see here, that's the growth of the Red Robin stock this year. That's 36,000 in additional growth from the borrowed margin revenue, right? That's not even counting the 15K that was originally put in. So if you do 36,000, right, that's the net, but you deduct the interest, then what we would do is times 7,500 times 8%, and we'd be looking at $600 in interest paid over the year. So if I take 36,000, which was the net growth, minus $600, that would be 35,400 net just by borrowing off of that margin. Now, I actually paid less than 600, and the reason why is because I began to pay off the margin balance just a month or two later. I paid off that extra 7,500, so I didn't even have to pay the interest because you can put in cash to take down that balance. With that being said, would you make that trade? All day long. Now, what are the risks though? I don't want to just share the light side of it. There is risk in margin. The risk is that if you go down, well, then it also affects your principal because now you owe that borrowed money back to the brokerage. So that is the risk. So I don't recommend day trading off of margin. I typically recommend like a buy and hold. And obviously, I'm not a stock advisor, so you would have to seek out professional advice for that. But I'm just sharing what I would do is when I make investment decisions using margin, I like to buy and hold because that's going to help mitigate my risk, and then I can pay off the margin in cash so that I'm no longer paying interest when I see a good opportunity. So how easy is it to get margin? Well, as you can see here, I'm on the E-Trade site. You can go to the brokers that you're using, and you just click on margins, and you can click on open an account. It just basically has you fill out a little bit more information, you agree to terms and conditions, and then you can get set up. And in your account, it just is basically, they'll tell you how much margin they're willing to give you for your account. Typically it's 50%. What is the other risk? The other risk is this. If your principal amount drops like below that 50% threshold, they can do what they call a margin call. And this is the risky part about it, is if your stock crashes, then they can trade your stock for you out of your control, and then you end up paying back the money to them because they traded your stock, and you could end up losing that balance.
I said, oh Lord Jesus, it's a fire.
And so it's very important that when you make the decision to do margin, that you are able to at least fund the account and pay back, with cash if your account begins to drop, so that you can mitigate that risk. And also, you want to make sure you have conviction over that stock, that it's a growth stock. So you got to see one illustration here, but here's the kicker. I did margins on all of the stocks that you see here. And that has been a lot of growth this year. As you could see, there's been a lot of growth in the portfolio because I really had conviction over all of these stocks when the economy fell. So you may not, feel the need to utilize margins right now in the market, but if you have this at least set up in your account, next time you see a good stock opportunity and you want to leverage OPM, you want to leverage that brokerage's account money, then you have it in your account set up and ready to go. So if you are trading, I recommend getting at least set up so that you have the option to use margins in your next trades. This one tip here, as you could see what it did in one stock for me, who knows what it could do for you. Maybe you can put in more than what I even invested in Red Robin, or maybe you just have 5K and you want to put in an extra $2,500 of borrowed money because you're excited about where a stock position is. Now you have the tools to be able to do it. So that's what a margin is. Hope you can take this, implement it to begin increasing your portfolio. Have an awesome rest of your day. Make sure to subscribe, leave your comments below, and I will see you guys in the next video.